Today, we're diving into one of the most head-scratching business stories of 2025. We're talking about Opendoor, the real estate tech company that lost over $1 billion and somehow spun it as good news. So, how'd they do that? Let's get into it. So here's the number that got everyone's attention. For the full year 2025, Opendoor reported a net loss of $1.3 billion. Yep, that's billion with a B. Just a staggering amount of money to lose. So you'd think the CEO would be pretty down, right? Well, you'd be wrong. His official take on the quarter that led to this massive loss? Just one word: good. Which naturally leads us all to ask one very, very obvious question. I mean, seriously, how is that even possible? How can these two things exist in the same reality? That's the puzzle we're going to solve today. We're going to look at the numbers, unpack the strategy they say is working, and see what Wall Street had to say about all this. Okay, first things first. Let's look at the cold, hard data because, on the surface, this paints a really bleak picture. So the numbers, they really look like a company in a nosedive. Revenue, down almost 18%. That's a huge hit. But look at the bottom line. The annual net loss didn't just get bigger, it exploded by over 230%. And the real kicker is that last quarter, where losses just skyrocketed by nearly 900% from the year before. Yikes. And listen, this wasn't just some creative accounting. The company's actual engine, the thing it does, was slowing way down. They were selling fewer homes, and maybe more importantly, they were buying way fewer homes to fill up their inventory. So from the outside looking in, pretty much everything seems to be going in the absolute wrong direction. But then you hear the other side of the story, the one coming from inside the executive offices. Yup, despite all that red ink, the CEO insisted that not only was there progress, but the evidence was clear. So where in the world were they seeing the silver lining? Well, they started pointing to some very specific internal numbers that tell a totally different story. So here's their counterargument. The company says, hey, forget the year-over-year numbers for a second and look at our recent momentum. Quarter over quarter, they bought 46% more homes and sold them 23% faster. And here's the crucial part. They claim the homes they bought under their new model have the highest profit margins per house in the company's entire history. And they're selling twice as fast. So in their eyes, this isn't a slump. It's the start of a huge rebound. Now, this optimism isn't just them wishing on a star. It's all based on a really radical change in strategy they're calling Opendoor 2.0. This whole new playbook really boils down to 4 big things. They're going all in on AI for their operations. They're launching new services like their own mortgage product. They're totally re-engineering their tech to get super efficient. And maybe the craziest part, they've kicked off a national expansion at a speed that is just breathtaking. And check this out. This gives you a sense of just how insane that expansion really is. It took Opendoor a full decade, 10 years, to get set up to serve about a third of the homes in the US. But under this new model, they nearly tripled that coverage in just 10 weeks. That's a massive, aggressive bet on getting bigger, faster. And that whole efficiency thing, it's not just talk. The CEO explained that they didn't just slash budgets. He said by actually improving their product and their code, costs just started to disappear. And here's the proof. They cut their annual hosting costs from a $12 million run rate down to less than $5 million. And they did it while making the product better and expanding everywhere. So you've got these two completely different stories, right? You've got the terrible annual numbers on one hand and this incredibly optimistic turnaround plan on the other. So which story did the market buy? So what did Wall Street think of all this? Well, it voted with its money. Instead of the stock crashing and burning, it actually jumped after they announced all this. As you can see, in after-hours trading, the shares popped pretty significantly. The market heard billion-dollar loss and basically just shrugged. So the takeaway here is pretty clear. For investors, what happened in the past was in the past. That 2025 balance sheet was way less important than the promise of Opendoor 2.0. They're placing a bet that the crazy fast expansion, the new efficiency, and this more profitable way of buying and selling homes is going to win in the long run. Which leaves us with the ultimate billion-dollar question. Is Opendoor pulling off a brilliant, gutsy turnaround that's going to reshape the entire real estate market? Or is this massive high-speed expansion just a house of cards built on risky bets and waiting to come crashing down? I guess only time will tell if this billion-dollar gamble actually pays off.